Hi there, traders. This is Brad Gilbert with today's trading action. All right, now let's just have a look at the markets. Now, the dollar inching lower, right? Jerome Powell, the Federal Reserve Chairman, has come out with a few sort of dovish comments, but he has still sort of mentioned that they want to see a little bit more data before they sort of pull the trigger, right? So that's quite interesting, right? That follows the data that we've been seeing. So the US dollar is sort of drifting lower at this stage, and that's the dollar index. Okay, let's just not call it the dollar overall, because you know what, dollar Swiss is still sort of hanging in there. Dollar yen also up. Dollar CAD, well, it did catch up with that move in oil. There was the hurricane or whatever it was in the Gulf, shutting down some rigs. That impacted the price of oil, and you see that sort of dollar CAD catching up very quickly. Euro slightly back into the range, as is sterling. Aussie's back up. We're just getting these gyrations, right? And it's very, very frustrating. Now, all we end up doing, okay, with our charts is basically redrawing our trend lines to what's going on. There's no major movement. So we're doing a bit of work here for sort of no returns, and that can often be very frustrating. But hang in there, right? Because as I said, I think better times are coming. Now, so we've got that move down in the dollar, right? And we see Euro, Sterling, Aussie, Kiwi go up. But if you have a look at the dashboard, right, and the yields here on, especially the long dated stuff, which moved up yesterday, are sort of still hanging in there, right? And equity markets, equity futures are down, right? That sort of follows that sort of higher interest rate sort of environment in the US, lower equities. And at the moment, we are seeing a bit of a risk-on situation, right? Euro, Sterling, Aussie, Kiwi up. Now, these clocks have just been reset. They're only up like 3 or 4 pips, so don't jump up and down and think you've got a big profile here. We've got to wait and see how it plays out through the Asian session. Bear in mind also, we do have when it comes to holidays, we do have the 4th of July coming up, right? So big holiday in the US. In fact, there's a bunch of exchanges here that are closed today. So today and tomorrow in particular, you're going to have thin market conditions, and that can lead to trading opportunities because there are still a few US numbers coming out. And if I just come back to the calendar here, like looking at where potential opportunities are today, well, focus on the instruments where there is a sensitive tone, right? Now, Aussie retail sales figures, the RBA has already sort of moved towards, or the market is positioning for an interest rate hike coming up at their next meeting. Well, this is the final number, but if there's weakness here, that could correct that. Or at the same time, if it's up towards the high end of expectations, up towards that 0.5, it could really confirm the interest rate hike, and that's going to give Aussie a push to the top side, right? So to me, the data is active. When the central banks start telling us exactly what their plan is and the data starts working with it, that becomes an active situation. So I'd suggest Aussie and Aussie crosses definitely worth having a look at today. We got some PMI numbers there out of Europe worth checking out. Mate, I'd say the German ones are a little bit better, but as I say all the time, the German numbers are spot on. They're pretty accurate. Some PMI numbers there, S&P PMI numbers out of the UK. I mean, it's all we've got to work with. And then you come down through that North American session, ADP national employment numbers. You know, we had the job JOLTS openings, okay, yesterday, and this is like a 3rd tier number at best. These numbers were a little bit stronger, and I did see some reference to them in some of the commentaries, but Jerome Powell's comments are the key aspects here that we're really looking for. The trade balance figures, I'm not a big fan of that, to be honest. Initial jobless claims, we'll check that out. You know, that's got a little bit more credibility than the JOLTS job openings. But as I said, it's going to be interesting because we are going to drift into the US holiday on the 4th of July. And we do have durable goods, factory orders, ISM non-manufacturing PMI numbers. These are sort of solid numbers that the market will be focusing on, right? We get further weakness in those. We're going to see further weakness in the US dollar. The best thing about these numbers when they come out, it's not like non-farm payrolls and inflation that just explodes. They come out, the market moves with them, right? So they're opportunities where It tells us what's going on, and we can see nice, easy trades in that. So for today, I've got to say, like, the Aussie does look like the big appeal to me as we lead into that US holiday over the next 48 hours. But just follow the trail of the data. There's nothing we can do. I know it's frustrating that we're not getting any sort of continued moves on the back of this, but all we can do is work with what we've got, right? It'll kick off soon enough. All right, guys, that's it from me. Have a good trade day. Not a lot to really jump up and down about, but that's where we are at the moment. Just follow these markets, follow the yields, follow the equity markets and the currencies, and let's see what we can make of it. All right, guys, have a good one. All the best. Cheerio.